Welcome back, traders. In this video, we are focusing on a concept that simplifies smart money trading, okay? And that is the simple ICT trading strategy. All right. Many traders get lost in complex strategies, indicators, and signals. The beauty of the simple ICT trading strategy is that it strips all of that away, right? And gives you a clear framework, which is focused on market structure, liquidity, and session timing. So these three pillars form the foundation of how price moves. Now, let us start with market structure. Okay, market structure is simply the sequence of highs and lows that define the market's direction, right? Okay, you can see price forming lower highs and lower lows. That is market structure. Okay, so basically when the market is making higher highs and higher lows, when the market is making higher highs and higher lows, okay, this is not exactly a good example because we had a lower low around here. Okay, um let's look for a good one. Okay, so when the market is making higher highs and higher lows is an example here, right? We say that the market is in a bullish trend, right? And then when the market is making lower highs and lower lows, we say the market is in a bearish trend. Okay, so the simple ICT trading strategy uses market structure as the backbone, right? You first identify the current trend, then you wait for signs of a potential shift. Okay, so now let us talk about liquidity. Liquidity pools are areas where stop losses and pending orders are sitting. It's often above recent highs. It's often above recent highs, you know, or below recent lows, right? It's often above recent highs or below recent lows. Institutions or smart money target these levels to gather the liquidity they need to place large orders. So when you see price running a previous high or low aggressively, that is often a liquidity grab. Okay, this is the moment you pay attention because it could be the setup for the real move. Now, the third piece of this strategy is session timing. The best time to look for ICT setups is around the London Open and the New York Open. Now, if you have not been the kind of trader that understands the significance of sessions, I think you should begin to do that. Okay. Now, in as much as the Forex market is open 24 hours, 5 days a week, it does not necessarily mean that all sessions have the same significance, right? We're not trying to look down on the other sessions, but when it comes to volatility, when it comes to liquidity, when it comes to specific kinds of activity in the market, there is a kind of significance that the London and the New York sessions have. I don't know, you might have been hearing about London sessions, New York session, this one happens during London, this one happens during New York, and all of that, right? So it's not just mere say, right? It's not just mere talk. There are actually some strategies that are session dependent. Now the Asian session has its own strategy. Yeah, there are some traders that perhaps the strategy revolves around the Asian session. So all sessions are important, all right? But what I'm just trying to say is that you should begin to understand the significance of sessions. If your strategy is Asian session based, then you will know that that Asian session has its significance. If your strategy is probably volatility based, or maybe based on one thing or another that is tied to the London and New York sessions, you will understand that these sessions are also significant. Okay, so now if you have not been paying attention to session timing, it is very important. Okay, now let us come back to the ICT setups that we are talking about. Okay, I said that it is usually around the London Open and the New York Open, right? Because these sessions bring the most volatility and volume, making it easier to see liquidity grabs and structural shifts. Okay, so during these times, the London and the New York open, price often makes a false move first, all right, taking out stops before moving in the true direction. So now let us put it all together. The simple ICT trading strategy works like this. You have to first of all start by identifying market structure, right? Ask yourself, are we bullish or bearish? Now, in this particular example, as you can see, we are bearish, right? So you have to mark out your obvious liquidity pools above highs and below lows. Mark out those liquidity pools, right? Areas where the smart money we want to grab liquidity from retail traders. You mark out those levels above highs and below lows. Okay. So during session opens, you watch if price runs those levels aggressively. All right. So when the New York session and the London session opens, individually, you check whether price runs through those liquidity zones that you've marked out. Okay. So once liquidity is grabbed, you look for a shift in structure. Now let's assume that we had okay. I like looking for real examples, to make it easier to understand. Okay, let's just use this here. You can see this is a recent high, right? It was a recent high during this period, right? So if you look closely, you'll see that when the London session opened, can you see that this area now, those that sold, they would have set their stop loss. You can see this is a significant area. You can see rejection here. You see rejection here, right? You can see this 1, 2, 3 candles. You can see how it was rejected around this zone. So now those might have sold, some persons might have sold and set their stop loss probably around here. But guess what? During the London session, you can see that the one of the candles went up, pushed above this zone, and grabbed liquidity, and then reversed back down. You can see, and that happened in the London session. So you have to pay attention, to liquidity grabs so that you do not fall victim. So once liquidity is grabbed, you look for a shift in structure. For example, you can see how price broke below this consolidation here, right? Broke below this consolidation. See this strong bearish candle, and see even this pullback, or we can call it kind of a retest of the breakout, and then you see a confirmation. Now, in as much as price eventually came back to test this level, guess what? We eventually had a significant bearish trend. Okay, so you always have to wait for your confirmation that you enter in the direction of the true move, aligning with the structure. So the power of this strategy lies in its simplicity. Instead of reacting to every price move, you wait patiently for liquidity grabs at the right time of the day. Okay, this removes confusion, keeps you disciplined, and helps you focus on the moves that matter. If you've ever opened your charts and felt overwhelmed, the simple ICT trading strategy can give you clarity. All right, it teaches you to see the market as a story. Liquidity is the fuel, structure is the map, and session timing is the clock. Okay, so by combining this, you'll start to recognize the patterns that repeat day after day. So that is the full breakdown of the simple ICT trading strategy. If you found this explanation helpful, make sure to click the like button and hit subscribe so you never miss future lessons on ICT strategies, smart money concepts, and Forex trading education. Thank you for watching, and I'll see you in the next video.